Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today we are diving into a filing that might sound like a bunch of lawyers just hanging out, but it actually means a company might be selling a lot of stock, and that can affect you. Tick the subscribe button. Also, join our Discord channel link below to continue the conversation. So this report is called a Form 8K, and it's basically a current report, meaning it's filed when something important happens. The date of the report and the earliest event reported is May 9, 2025. KKR Capital Corp, the company we're looking at, filed it. KKR Capital Corp is a company that provides financing to other companies, often called a business development company. They invest in private companies and help them grow, kind of like a bank, but for smaller businesses that might not get loans from big banks. They are registered in Maryland. Their headquarters are in Philadelphia, Pennsylvania. Okay, here's the big news. Under Item 1.01, entry into a material definitive agreement. This basically means they've made a deal that's important enough to tell the SEC about. The company entered into what are called equity distribution agreements with several firms, including Truist Securities, RBC Capital Markets, KKR Capital Markets, LLC, and SMBC Nikko Securities America, Inc. We will call them the sales agents. Think of these firms as brokers who will help the company sell its stock. These agreements allow KKR Capital Corp to issue and sell up to $750 million worth of their common stock. This is where it gets interesting. Selling this much stock can have a few effects. The sales will be made using something called a prospectus supplement along with an older prospectus. That's a document that provides details about an investment offering to the public. Both of them together are based on a shelf registration statement that the company has with the SEC. Now, what are some ways in which the company will sell shares? The sales could happen in a few different ways, either directly on the New York Stock Exchange or through market makers, or even in what they call block trades. Block trades are large transactions that can move the market because the price of the shares will be based on the current market prices, or they might negotiate the price of the sales will be based on the current market prices, or they might negotiate the prices. The firms helping them sell the stock, the sales agents, will get a commission. This commission is up to 1.5% of the money they make from selling the shares. There's also a rule about the price. They can't sell the stock for less than the company's net asset value (NAV) per share. Net asset value is basically the value of the company's assets minus its liabilities, divided by the number of outstanding shares, which gives you a per share value. To make sure the company isn't selling shares below NAV, the company's investment advisor might step in. The advisor can pay some or all of the commissions or make extra payments to make sure the sales price stays above the NAVs. It's important to note that the company doesn't have to sell any shares if it doesn't want to. The sales will depend on things like the market, the stock price, and whether the company needs more money. If you want to dig deeper, you can find the full equity distribution agreements as Exhibit 1.1 in this report. Exhibit 5.1 is a legal opinion about the stock sale, specifically from the law firm of Mars & Stockbridge PC. This confirms that the company is legally allowed to issue and sell these shares. Now let's step back and talk about what this all means. KKR Capital Corp wants the option to sell a large chunk of its stock. Why is this important? First, it gives the company flexibility. If they see a good investment opportunity, they can quickly raise money by selling shares. Second, it could dilute existing shareholders. When a company issues more shares, each existing share represents a smaller piece of the pie. This can lower the earnings per share and potentially the stock price. The third, it signals something about the company's strategy. Are they planning a big acquisition? Do they need cash to pay down debt, or are they just preparing for future opportunities? Plus, for risks, we can see that KKR Capital Corp's ability to execute this stock offering depends heavily on market conditions. If the market turns sour or investors become wary, they might not be able to sell all those shares at the price they want. It signals something about the company's strategy. Are they planning a big acquisition? Do they need cash to pay down debt, or are they just preparing for future opportunities? Keeping a close eye on how KKR. In summary, KKR Capital Corp is setting the stage to potentially raise a lot of money by selling stock. This could fuel growth, but it also comes with risks for existing shareholders. It's a financial move that warrants a close look. Now for my take. KKR's move to authorize the sale of up to $750 million in stock is a classic double-edged sword. On one hand, it gives them serious firepower to jump on new investment opportunities or strengthen their balance sheet. On the other hand, that potential dilution of existing shares isn't exactly a warm and fuzzy feeling for current investors. It really boils down to execution. If they use this capital wisely, investing in high return ventures and boosting the company's overall value, then the dilution becomes a minor sting compared to the long-term gain. But if they squander the money on mediocre investments or, worse, use it to cover up deeper problems, then shareholders have every right to be concerned. The fact that their investment advisor is willing to step in and cover commissions to keep the share price above NAV is a slightly comforting sign. It suggests they're committed to protecting shareholders, at least in the short term. However, it doesn't change the fundamental risk that issuing new shares can dilute the value of existing ones. Overall, I'd say KKR is walking a tightrope here. They have a significant opportunity to grow and strengthen their position, but they need to be laser focused on making smart investment decisions. Investors should keep a close watch on how they deploy this capital and hold them accountable for delivering real value. Alright, that's our breakdown of KKR Capital Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.